Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, 𝗘𝗀𝗓𝗏, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, 𝗘𝗀𝗓𝗏.
Welcome in, 𝗘𝗀𝗓𝗏 with Real Estate Radio Live. I hope everyone is doing well. Thank you again for those that are continuing to follow the show. We appreciate that very much. Again, for almost 11 years and over 1,700 interviews between live radio and podcasts, we can continue to provide, hopefully, great content, information, and education for you, the consumer, and the real estate industry as well. And we want to continue to do that. Trying to get at least one podcast out a week, and hopefully we'll pick that up soon. Most of you know that have been following the show for a long time. We were doing these podcasts in our studio here locally for a long time, had guests in, and then when the pandemic hit, that affected everything like most other businesses. But we will hopefully be getting to that, back to that pretty soon, and more guests to be joining me as well. So as always, if you have any suggestions for shows or ideas, email those in, text those in. Always good to hear from people. We get at least a dozen or so texts and emails each week on what's going on in the marketplace. I follow it on a regular basis. Most of you know I've done that for, again, nearly 20 years and continue to do that. Hopefully give good advice, updates on markets, real estate, financing, investment property, a lot of different things. We also do a lot of shows that are unrelated to real estate, which I'm very proud of. We do giving back segments, help organizations raise money, help bring awareness to certain community things that are going on. And we're very proud of that. So again, before I forget, if you're listening to this podcast and you have a message you'd like to get out, you think it's a good cause, whether it's, again, raising money for the homeless, or we've done shows on depression, anxiety, community events, trying to support people in shelters, all kinds of different things. City team, we did some things with them, on and on I could go. But if you have a cause or a need and you know someone that needs to try to get the message out, I'm not saying that we're going to be the one that's going to get the message to everyone, but we do have over 10,000 plus downloads a month. So we do have quite a few listeners and people that follow the show, which I'm very grateful for. All right, before we get started, the title today is Get the Money While It's Cheap. And I'm going to go into the details about that and the reasons why everyone should have a mortgage if you have a property. And I don't care who you are. Some people are going to say, Joe, are you crazy? I want to pay my mortgage off. And I'm going to talk to you about that. And I'm going to make some suggestions and some recommendations of why everyone, if you have at least one property, every single person should have some kind of mortgage on it. And I'm going to talk about why I believe that in just a minute. Again, before we get started, the show is always brought to you by Bundle Select. Bundle Select partners with corporations throughout the United States to help employees support the real estate and lending, bundled all their services. So over 13 million employees now have signed up for Bundle Select, and on the platform, companies like Boeing and Salesforce and Adobe, and I could go on and on, the companies that have signed up and that are helping their employees with discounts and benefits on real estate and lending. That is bundleselect.com. Find out again why over 13 million employees have signed up. And so if you are an employee of a company and you'd love to have this benefit that's no cost to you and your company, check in with us at bundleselect.com. And or if you're an HR benefits person that is interested in offering some incredible benefits to your employees, just as valuable, you could argue, as medical and dental and 401k is the cost of real estate and lending. We can help you with that at bundleselect.com. All right, so I'm going to dive in today and talk a little bit about secure the cheap money while it lasts. And so for those that may or may not have a mortgage, when I talk about cheap money, I talk about how inexpensive mortgage rates are right now. And in some cases, down below 3%, 15-year money is in the low twos, 30-year fixed is still below 3. I just can't stress enough how important it is to take advantage of this cheap money and secure it as much as you can, as soon as you can, because I don't know that rates will ever, I really don't. In a global economy like we have these days, as quick as things move and as fast as things move, and, as fast as the Fed has his or her finger on the trigger, depending where they need to ease or relax or accelerate the prime lending rate, I don't know that in our lifetime we'll ever see, interest rates at 8, 9, 10%. I don't see it. Doesn't mean it wouldn't happen. I just don't see it in a global economy the way things operate right now. But what I will say is I don't see any reason why rates couldn't get back up to 4 to 5%. I really don't, especially in the 4% range. I really don't. 4.5%, 4.75%. There's no reason why rates, especially with inflation pressing upon us, that we could see interest rates in the high 4%. And, I don't know that it would creep into 5%, but just don't know. So take advantage of it right now. And, my team and I do mortgages. We've had for the last 22 years. So always contact us. We've already helped hundreds and hundreds of people over the last 18 months just because rates have been so low, but also with purchases. Now's a great time as well. People might be thinking, I want to hold off on that purchase. I would say, most of you know my philosophy. It's always a good time to buy if you're taking a long-term view. So I'll say it real quickly. In my opinion, and I study this up every day, it's always a good time to buy if you're taking a long-term view. Now, if you're worried about timing the market and you're concerned about flipping a home, or you may only hold it for 3 or 4 years, that's a different story, completely different story. Then I would say be careful when you buy. But through my career and my lifetime, the real estate transactions I've had personally and the thousands of people that I've helped, I could tell you, for the most part, if you take a long-term approach, usually it's going to work out okay. Nothing is ever guaranteed, of course, but most of the people will share with you and let you know that most of the people that have taken a long-term approach with real estate have done quite well, and have done pretty well over the last 5, 10, 15, 20 plus years for sure. Secure the cheap money while it lasts. So let me talk a little bit. I've done this before, but I love to stress it again for those that may have missed it. So I apologize for those that may be thinking, Joe, it's repetitive. I've heard this story before, but it's worth repeating because I want to make sure that everybody understands why it's so important to secure a mortgage on a piece of real estate right now when the money's so cheap. Let's just say you could get, again, interest rates below 3%. So 2 7/8, 2 3/4. You secure a 30-year fix for $300,000 on your property, even if you don't have a mortgage. Go out and get a mortgage. And people would say, Joe, you're crazy. Why would I get a mortgage? I want to pay my mortgage off. I would argue, and I know this would be a great debate. I'd love to have the debate. I'd love to have the panel, and I would love, believe me, to have this debate. But now, unless you're 85, 90 years old, or, there's a reason why you can't, I get that. There's going to be a percentage of people that should not have a mortgage. And don't get me wrong, I understand that. But honestly, even if you're in your 60s or 70s, and sometimes even older, there's no reason why you shouldn't have a mortgage at rates this cheap. And people, again, the debate and the person is always going to say, Joe, I want to pay off my mortgage. Why? I would ask you why. Why do you want to pay off your mortgage? Because it makes you feel good? Because it's a sense of security? Or because it's the best financial decision, or if it's a wise financial decision? I would ask you that. So if it makes you feel good and you sleep better at night, again, I understand that. I'm not saying don't do it if you're going to stress out. That's not my point. But when you take this example and you're thinking about paying off your mortgage, or you're thinking about whether you want a mortgage or not, and you could secure a mortgage for $300,000, let's just take an example, at 2 3/4 or 2 7/8. Remember, You're not only getting money at historic lows and the cheapest it's ever been, but remember, this is the other piece that I don't want you to forget about. You are putting a mortgage on an appreciating asset. That's right, an appreciating asset, which is a piece of real estate, whether it's commercial or residential. Listen, I've used this example with stocks before, and this is a great example. A lot of people, well, I'm going to go buy Apple and Google and Tesla and on and on. Those are all, again, if it's a long-term hold, those are all great ideas and great stocks. Don't get me wrong. But remember, when you buy $100,000 or $10,000 worth of stock, whether it's Apple, Google, I don't care who it is, GM, doesn't matter. Think about it. You only benefit when what happens? So if you spend $100,000 on stock, right? When do you benefit? Of course, when the stock goes up, right? When it goes up. So that $100,000 that you just invested in a stock, the only time you benefit is when the stock goes up. The stock could go down, but that's it. It's still a good investment. I'm not saying don't do it, but the example is if you put a $100,000 mortgage on your house at, again, below 3%, and it's a $500,000 house or $1 million house in value in the marketplace, do the math. Even at 3% or a 3 or 4% appreciation rate annually, do the math. That $100,000 investment is a fixed rate of money at 2 7/8, right? And it's on an appreciating asset that is gaining you somewhere between an average of 3 to 4% annually in equity and appreciation in that property. This is why real estate is so good in so many different ways, is because the cheaper you get the money, the more it makes sense to acquire properties and to put mortgage on properties. Seriously, if you have a home that's worth $500,000 or $1 million, take the number. Now, but before I say this, I'm going to be careful because it's not for everybody. But why would you take money from your savings or investments or want to accelerate a payoff of a reasonable mortgage? Again, let's just say for this conversation, your house is worth $1 million and you have a $400,000 mortgage on it. Okay, let's just say, use that as an example. Why would you want to accelerate that payoff if the money's so cheap and you have an appreciating asset? And by the way, depending on your income, you have a tax benefit for the mortgage interest that you could write off. Remember, appreciating asset, cost of money below 3%, and a tax benefit. Those three things are really the perfect storm when it comes to real estate. You have your money working for you in an appreciating asset. And some people would say, well, Joe, real estate could go down just like it goes up. I understand that. Believe me, I've been in several markets. I get it. I'm talking about the long-term view and the long-term approach to this. This is my point. This is what I want to try to get across today, to secure cheap money while it lasts. The other piece that I want to really stress today is with cheap money, now is the best time than ever. If you want to remodel, take cash out, add on, pay off an equity line, pay off student debt, do anything like that, now is the best time ever to do that. Seriously. I mean, here's the other beautiful part about when you reinvest money back into your home, okay? Let me add to the benefits here that I want to just make sure I don't miss this for you. And I want desperately for everybody to understand this and why there's a strategy involved here. So you owe $300,000 on your home and it's worth $1 million. Let's say that, your home right now is, because of your square footage, let's say in your marketplace, that's just easy numbers, right? You're at $500 a square foot. you look in your marketplace, you look at the comps, you look at your neighborhood, and your home is going for about $500 a square foot, okay? And you have a $300,000 mortgage on it. And you think to yourself, God, it'd be nice to add another room, maybe a large master bath in a bedroom, or maybe add another, 1,000 square feet or another 500 square feet, or maybe do something to enhance, maybe add a new kitchen. Think about this, right? If you're at $500 a square foot, and just do the simple math, if you decide to add a bedroom, and let's just say it costs $250 a square foot to do that. And, depending where you live, it could cost more or less. I get it. Some people might say, are you kidding me? It's more like 500 a square foot. I understand. It depends what kind of custom, who's doing it for you, if there's bathrooms involved and kitchens, I get all that. But again, here's the other beautiful part about the cheap cost of money right now. You pull a couple $100,000 out, you reinvest it back into your property, you add that additional room, you upgrade the kitchen, you add a new bathroom. Anything you do to your home is likely, in most cases, to give it more value. So all you're really doing is reinvesting in that original investment that is paying dividends already. Now, granted, you can't take advantage of those dividends until you sell the house and gain the equity. I get that. But it's, for most people, the reason why I'm stressing this so much is for most people, their homes have become part of their retirement strategy. And I realize that 20, 30, 40, 50 years ago, homes were never part of a retirement strategy. Homes were where you paid off the mortgage and you had a big party and you burned your deed and you said, I no longer own a mortgage. I own this house free and clear. And I understand that to a certain extent, why someone doesn't want a mortgage payment depending on where you are in your life. I do. But I would argue, and again, for those that are even skeptical, I'd say sit down with someone that's objective and that understands finance and investments and diversification, and see what they think about you adding a mortgage or increasing a mortgage if you're going to reinvest it, and or rather than take money and pay a mortgage off. I see people that are accelerating their payoff, or they call me or their financial planner and they say, I only owe $300,000 on my mortgage. I'm thinking about just taking $300,000 from my retirement and paying it off. No, the big stop sign should go up. The big stop signs should go up most of the time. Again, I'm not saying 100% of the time, but now think about what you're doing. You're taking $300,000 from an investment account that is likely going to be gaining you a return over years to come. You're taking that money, right? Follow me here. You're taking money from a potentially interest-bearing account that's going to be giving you returns on investments, and then you're paying off a mortgage on a home with what? So guess what you've just done? You've just taken $300,000 and you've removed the potential to earn dividends, return, and investments on that $300,000 over the next 5, 10, 15 years. You've taken that away. Think about it. And you paid off a mortgage, and someone might well say, well, yeah, but now I don't have a $1,500 mortgage or a $1,200 mortgage, right? But now you've removed your tax benefit. Regardless of what you're making, you still get a tax benefit. And you've removed an investment that is going to be paying you over the next period of time. And you've paid off a mortgage on an appreciating asset. So again, this is not for everyone, but I could argue that things have changed. Philosophies have changed. If you ask most financial planners, most financial advisors right now, depending on your situation, most of them would say, have a mortgage almost your entire life. It just depends on the size of the mortgage. Do you want $1 million mortgage when you're 70 years old? No. But do you want a $200,000 mortgage when you're 70? Sure. Why not? Why not? I mean, again, $200,000 mortgage, $1,100 a month payment, $1,000 a month payment, whatever it is, with rates this low, $1,200, and you get to deduct the interest on that, 100% of the mortgage interest, all the way up to a loan amount of $750,000. Why not? Why not? I mean, again, it depends. The other thing that is changing, the dynamic that is changing in the marketplace in this economy right now, is people are working longer. Now, some people are working longer because they choose to. Some people are working longer because they have to. Some people are working longer because, again, they enjoy what they're doing and they want to continue to work. Retirement is different than it was for our parents and grandparents. Most of you remember retirement was this big thing where people worked for 35 years, got their watch, got their plaques, got their recognitions, got their parties, and then they went home and tried to figure out what they wanted to do. The time has changed for the most part with that. It really has. I mean, when someone asks me, Joe, when are you going to retire? I tell them I have no idea. Because instead of retire, I look at more of a phase down or a phase out. I'll probably be involved with investments in real estate and business to a certain extent for the next 10, 15, 20 years still. Just because I enjoy it. It's not, it's not physically demanding. It's not hard on the body. And you could do it and still stay sharp and still be part of a learning, growing environment. So it all depends. And I'm not saying, again, I'll preface this, it doesn't mean it's for everybody, but my message today to all of you that are out listening to this podcast right now is that seriously consider making sure you take advantage of this cheap money out here. Take advantage of it while it lasts. It won't last long. Everybody thinks, this is going to last forever, and I hope it does, but it won't. It never does. We're going to look back, and I guarantee you, most of you are already happy. I know I am. If you're looking back and you've secured mortgages in the 2% range, you are thumbs up, good to go, and congratulations, because you have cheap money on an appreciating asset. So congratulations for those that have done that. For those that haven't and are considering, it's not too late. You can do it. So before I finish up today, I just want to kind of summarize a couple different things. Take advantage of money while it's cheap. It's cheap right now. Secure mortgage on your properties. By the way, this also means not only your primary residence, but any second homes or investment properties, rental properties. Now's a great time to put mortgages on those as well. I mean, right now, you could get non-owner investment rates for the low 3%. Are you kidding me? You guys, ladies and gentlemen, investment property for the low to mid 3% range. Seriously, a couple of years ago, people were excited to have interest rates of 4 or 4.5% on an investment property. You could get that for 1 full percent cheaper right now. You're talking about 3.5% and sometimes lower for investment property financing. I can't stress this enough. Take advantage of it. This should be part of a strategy for everyone who owns property, who wants to get further ahead, who wants to gain more momentum, who wants more opportunity. Secure cheap money while it lasts. The other thing, just to summarize too, I'm seeing this a lot and I'm a big fan of it. Now's a great time to pay off home equity lines. Get rid of those, because if rates go up, guess what? Home equity lines go up. Now's a great time to take cash out, remodel. Now's a great time to take cash out, do an add-on. Now's a great time to take cash out and maybe pay off student debt, student loans, high credit card debt, anything that is burdening you with high interest rates, and you could take out against your house, within reason, not leveraging irresponsibly, but within reason, is a great time to do it. And I would encourage people to really think about it. And on the purchase side, my gosh, don't forget about that. It's a great time to purchase. I know in the Bay Area, there's a lot of frustrated buyers because you're getting overbid, you're getting outbid, you're getting frustrated because the home prices continue going up. I know it's frustrating. I do think there'll be a little bit of a window of opportunity for those that are interested. Normally right around when it hits Thanksgiving time, things start to slow down a little bit for the listing side because people start focusing on holidays, Thanksgiving, Christmas, New Year's. So a lot of times you have a slowdown in the real estate market, right towards mid to late November. So I would encourage those buyers. I just was speaking to some people the other day on this. Don't give up, because if you're discouraged in the market and you're trying to buy, I do think there'll be some more opportunities here in the next couple of months, because a lot of people do get distracted. They got other things on their mind. They're in the middle of other stuff. They stop kind of thinking about real estate and other things. So that could be a good time, a good opportunity. If you're out there a buyer, you're a little frustrated, I would say hang on, keep an eye on the market, work with your great real estate agents, and keep an eye on the marketplace, because right around, Thanksgiving and then rolling into December, you could find some opportunities that may not exist now or a couple of months ago, just because there are less people active in the real estate market during the holidays. So that could be a good opportunity for you to make sure that you still have an opportunity to buy. Just get in, get secured, especially with the high rates of rents right now. I mean, everybody knows how expensive rents are. I just, for most people, not all people, especially if you're in your 20s, 30s, 40s, it's a great time to continue to buy real estate if you can, and hold on it for a long term. The long-term approach is always the best way to do it. And those are good opportunities that come up, and you never know what that leads to. A lot of people have leveraged their real estate to buy more real estate. We see that all the time too. I didn't mention that, but I'll mention that before I duck out too. I'm seeing a fair amount of people take cash out, $100,000, $200,000 cash out of their primary residence, and they're going to use it for a down payment to buy a second home or a rental property. There's nothing wrong with that. Someone might say, well, why would you do that? And let me tell you some of the people that are doing this, by the way. Some of the people that are taking cash out to buy a second home or a vacation or a rental property, let me just share with you. It's not people that don't have the money to do it. You know why they're doing it? Because it's smart. They're leveraging the equity and the low cost of money on their mortgage. I just had 3 people this past week, 3 people that started a refinance. They're all taking anywhere from $100,000 to $300,000 out of their primary residence at a low cost of money, again, below 3%, and they're using that money to buy another home. And believe me, these people don't need to refinance and pull money out. They could take it from their investments or their savings, but guess what? Why would they? Most people, when they understand the cost of money, they're thinking to themselves, why would I dip into my savings and my investment and my retirement on my 401k for a down payment when that exists already in the form of cheap money? So don't let that slip by you as well. Anyone that is thinking about buying a second home or an investment property, consider taking cash out on your primary residence for part of that down payment. Again, this is not for everybody. And someone might be listening to this podcast, Joe, you're crazy. That's how people get in trouble. No, that's not. That, of course, some people do get in trouble if they irresponsibly spend money or leverage their house. I get it. But not if you understand what you're doing and you have a plan and you understand the benefits, the advantages, and also the disadvantages. You have to understand those things as well. I would say this. I've been doing this a long time, and we bring this information to you, the consumer, on a regular basis to help you make wise financial decisions. That's what we hope to do. That's what our goals and objectives are. But as I always remind everyone, check before you make any kind of decisions with your real estate or your investments or taking cash out. Please do me a favor, sit down, put pencil to paper, talk to your financial planner, your financial advisor, talk to your CPA. If you have friends that you trust that are good with finances and money, talk to them. It's always good to bounce ideas off people that you trust and people that are good with money and people that are logical that have been doing this for a while. I would also say there's great opportunities to invest outside of California. But before you do that, I tell people all the time, it's worth to get on a plane, go see what you're going to invest in, or find someone that have had a lot of success investing in certain states or cities outside of California and get with them and figure out what their success is and why they're having success. So those are all things to consider if you're thinking about investing outside of California. I don't think it's not the topic today, but I think it's almost impossible to find any kind of reasonable deal that would make sense to invest in California from an investment property perspective, not a primary residence. But it's difficult because of the amount of money you have to put down. You're leveraging a lot of money and a lot of capital, and the rate of return is not very good unless you put more money down, which, it offsets the whole reasoning behind that investment. So, all right, with that, again, take advantage of cheap money while it lasts. How long will it last? None of us know, but most of us think that these low rates will probably be around this year and maybe the first part of next year, and then they could just start disappearing. We could start seeing interest rates go up 0.5% to 1%, a year from now, maybe mid to late next year. All right, for more information, you can always reach me, same place, Joe at RERL-live.com or 408-838-9060. That's 408-838-9060. Text me, give us a call if you have any questions about financing. If you need a real estate agent, you need a financial planner, you need a CPA, you need a real estate attorney. We have all those people in partnerships that could help you with any of that you need in your services. So thanks again for tuning in. Thank you for being loyal listeners. I really greatly appreciate all of you that have continued to follow the show for so many years. It means a lot, and I want to thank you again for that and for the feedback as well over the years. Take care. Have a great afternoon. We'll be back with you next week.
You've been listening to Real Estate Radio Live. For more information on today's program, visit RERadiolive.com. That's RERadiolive.com. Subscribe to our podcast. Discover more at RERadiolive.com.